Good morning, weekly update of the stock market Thursday, March 6, 8:02 a.m. Eastern Time, and this will be primarily the U.S. stock market. Okay, if not entirely. All right. Hourly chart. First of all, the market is down 61 points in the S&P 500 overnight, 400 points down the Dow. I forget on the NASDAQ. Why is it down? CNBC headlines said that people are still confused over the tariffs, and I guess they assume they'd rather sell while they're confused. I think they're also nervous and leaning more on, hey, what else is going to break? How bad are things going to get? Other than that, there really wasn't any significant news to be down, and this could be a test when they put it down this much overnight to see what happens today when we get the larger market rolling, the cash market. Will they also want to sell, or will they view this as a little bit of a buy the dip? And we'll discuss that in a moment. Let's give you a quick snapshot for those of you who got to run. The market bumped its head on this old downside target. That makes sense. If it wants to go higher, it can go up to about 59.04, and then I'll show you a target on the futures in a moment. Potential target is not a target yet. Downside, however, we do still have targets on the table, on the desk, that could still occur on the downside. 57.43 worked well twice. Then we have 57.16 and 56.89. It was overbought on the hourly chart going into the close, so I'm not surprised that it was actually is down this morning. Now let's look at the 6-hour chart with the futures and some model analysis. We do have potential down. Notice it came down to that price level there, 57.43. We have 57.14. We have 56.84 for the futures. May or may not coincide with how the cash is going. All right. Now, yesterday got a level 4 rally, and it's over and done with. In theory, the market could snap up over the next 3 or 4 hours and then snap right back down to put in a late level 4. But the model's just saying, give it up. It topped out not on the earliest allowed, but it definitely wasn't late. And it topped out yesterday, and the level 4 swing is down. Now, here's the dilemma. The problem is we can get a level 4 bottom today relative to March 4th, okay? So this could be where they're actually going to buy it. They're going to say, okay, they dipped it. They got carried away overnight. They didn't know what they were doing. We're going to buy it, all right? That's possible, and that means it'll be up tomorrow and possibly even up into Monday, Sunday night, but at least up for tomorrow. Well, that's also possible. It's end of the week. They may want to buy it. The problem is we have a dilemma right now where I can't help you that much with level 4s here. I can move that March 4th level 4 to March 5th. If so, the market should not bottom until tomorrow, okay, and maybe Monday, Sunday night. Exact opposite. This tells me the traders really don't know what they really want to do. Even the level 4 trader can't seem to get on board. They just don't know what to do. I think it's because the market's near the 200-day average, okay? All right, so what we want is that we're just going to have to watch it, take clues here. We don't know for sure. And the other thing we must consider is even though it could have put a level 3 bottom in on March 4th, it does not have to put that bottom into later, and I'll show you on the daily chart. And even though we called a level 3 top ahead of time in rule violation, so proud of being that aggressive on it and getting it right, at the same time, the more true level 3 top can occur on the way down, okay? And what this could lead is going from a bottom to a top. It can lead for a much lengthier, larger decline, all right? I have this ellipse here to tell me that if it will take out yesterday's high in the futures, 58.69.5, that it may rally into near that 59.50, but I think that's all it will do. But I can't rule out some surprising news where they get all giddy and happy that Trump isn't going to destroy the country after all and stuff like that. Can really make a sizable gyration up, but I don't think so. I think this market's going lower. So redoing this here, what our summary, the level 4 are the intra-week pops and drops day to day. Sometimes they occur only during a day, the major intraday. And it was up yesterday. It was supposed to be, proud of the model, but there was no way of knowing that it was going to top about the earliest, or not earliest, a little later than early, okay? And really, I couldn't find evidence last night that I would have dared sell it. Okay. And so we're saying the level 4 is probably down. Does it bottom today? Does it bottom tomorrow? And unfortunately, we don't know. And if it is lower tomorrow, we also have to be concerned. Well, actually, it could bottom tomorrow, but we have to be concerned it doesn't bottom Monday, Sunday. So I kind of hate to miss out because, frankly, I've been betting on real fast trades here, and I'm out, and I've made some money, and I don't want to give that money back. I'm already going to spend it. Okay, to heck with retirement. All right, and I hate to start over again, and I'd like to get it right. And to me, I guess I'm going to have to miss out on the downside here. I think I'd rather sell bounces and pops here, rallies, more than anything else. So not a lot of help there on this level 3 business. So let's go ahead and zoom out for the daily chart, okay? And what we want is we want the daily S&P 500. And cash, and we can see that it came down to the 200-day average. It's near my 7% minimum downside target in terms of the long-term stuff, but I got a feeling there's much more downside than this. I don't trust it. I don't think it's close enough, all right? I think they tried to bounce it off the 200-day average yesterday. Today, they're going to pull it back, and they may put it down into tomorrow, and then it should bottom. But it can also bottom today. Problem is there's an alternate scenario saying, no, it's probably not early next week. It's very, very difficult. I think if they traded above yesterday's high at 5860.59, they're going to try to make an attempt to get it back to 6,000 to that moving average. I don't think it's going to work. They're going to get it up part of the way. Then it's going to be right back down again, okay? Now, if they trade below the low of this week at 5732.59, this could still be a bit of a trap that they put it below the average, and they normally like doing that. Get it below the average, scare people that don't study the history of averages, and they get scared, oh, it's all over and done with. And they literally buy it as the others are selling. And next thing you know, it's right back above the 200-day average. So I won't be surprised. It's going down this week. It's going below to a new low for the week. It's going below that 200-day average at 57.28, and it's a live average right at the moment. Okay. So at any rate, and it is so oversold daily that it makes me think, well, we really shouldn't be selling here. You should sell pops. You should sell bounces. You should sell rallies. What's the difference? I don't know. A pop is just maybe during the day or two. A bounce would be maybe a few days, and then a rally maybe a few weeks or something. And I don't think we really have a rally coming. I think the market is too weak to do that. All right. And then let's see. Let's go to the Dow Jones Industrials, and this one probably put in a beautiful level 3 top. Whereas it's fuzzy on the S&P 500, it's also a bit clear on the NASDAQ. At any rate, it came down to my downside target and bounced. That's interesting. Get a gold star for that. But time-wise, though, it's not ready for a bottom, and maybe, I don't think it's, maybe it's going to bottom to level 3 by today on into early next week, but I'm just nervous there's something else going on that it can take longer than that. And it can put it down close to this moving average at 41,884, so do keep an eye on that. And next we'll go to the NASDAQ, but we'll use the futures. And here it is overnight. It's back to that moving average, okay, 23,373 or so, off the 5-day moving average. And it just may go down, down, down. They've already had it below the 200, put it up. That's normal behavior. Now they're going to get nervous. It goes down below again. They're going to get nervous. There just isn't enough buying. They're still selling. There's still supply here. They're going to get nervous. But if they can turn that around and get it back above the overnight high, okay, and more so above yesterday's high at 27.25, that'd be the March futures, that could be a little more constructive for a little more bounce before going down. These indicators have been so oversold now that it really should bounce first, at least rest for a little while before going lower still. So let's go to the S&P 500 futures and show you a little more history. I find this fascinating. It came down to this trend line and bounced. Now, Some of that may be because the 200-day average is in there somewheres. For some reason, the chart wouldn't put it up for me there this morning. Anyway, we get a bounce. I think it's just level 4. It's pulling back for level 4. And what the model's warning, if it did not bottom March 4th or 5th for the more important level 3. The level 3 is a monthly buy-sell signal. Sometimes you can get 2 buys with a sell in the middle, and you can turn that upside down for that pattern, 2 sells and a buy in the middle. But generally, I think of it as a buy-sell per month, the uptrend, downtrend per month. It's how we do business in all markets. It's just there. Sometimes very easy to detect, sometimes not. Any rate, I'm thinking that the level 3 does not have to bottom to next week, unfortunately, but I think it will bottom no later than Tuesday, and are really stretching the rubber band here. It really ought to bottom this week, today, tomorrow, okay? And I'm thinking we can get a bounce out of that for level 4, and if on March 3rd that was not a level 3 top, it might be a sizable bounce, but I do not believe it's going back to 6,000 or higher and taking out what I called as a level 3 top. I think the best will make a nice retracement up towards 59.50 if it's a good level 3 rally, but I'm concerned this whole level 3 top, level 3 rally stuff doesn't really matter, okay? It's not going to work out that well because of larger downtrends that I'll show you in a moment. So I'm just focused at the moment that I hope I'm not missing out of just a relentless decline for several days yet, that it's not going to hold the 200-day average and they're going to panic. For the moment, it looks like it's trying to find its feet. They're playing some games here to see who blinks first. Is there some strength there? Is there some demand there? Or are people just going to keep selling? And I think it should blip up a bit in the next few days. It may be better to sell this level 3, next level 3 downtrend sometime next week. But maybe tomorrow they'll give us such a good bounce, I might want to sell something ahead of the weekend, sell some more next week if it goes higher still. Potential downside is this ellipse in here, that if it wants to keep going lower, okay, so consider that. So I can't be all that helpful. I can't really call level 3 bottom here. It's due. It's getting late. The odds should be rising, so it ought to be high probability. But with all this Trump stuff, tariff stuff, it makes me nervous. We might be in a miniature 1987 crash. We might be in a real miniature 1929 crash, okay? And then I'm also thinking we might have something similar or a miniature version of the 2020 crash. And so this could just break loose and people just lose their minds and sell. So do keep that in mind. Now, S&P 5, let's go to the weekly chart and get an idea of what's going on here for some of these larger trends. Maybe it'll make it easier to follow, maybe not. Very convinced that record high is a level 1. The market may crash and burn into a level 1 and then maybe even a long-term bottom and then up and away into next year. It may crash and burn, but later change its mind and put a long-term bottom in as late as October of this year, then up into next year, okay? Another scenario is it comes down into a level 2, up for level 2, comes down to level 1 in May, June, July, and that can be a crash burning moment. So it's telling us there's plenty of potential for the Trump tariff stuff to really wreck things and scare investors. But in between those moments, the market can pick its head up and find some demand. It can bounce, and we may even get some good news, okay? Any rate, for the near term, instead of worrying about what's going on for the rest of this year, just realize this market can drop 10%, 20%, 30%, 60%, probably no more. The bigger the drop, the lower the probability, and dramatically low probability, okay? It may only drop -7 to -13% this year and then move higher. But near term, very convinced it should move lower into the week of March 17th to the week of April 7th for at least a level 2 bottom. It may be more important than that. What are the level 2s? Well, they occur several times during a year. They're in second most important fluctuation during a year. What's the first important? Well, it occurs just a few times a year, and it's the level 1. Okay, and we need a level 1 when we're to help us time long-term bull bear markets. Okay, now another way of looking at this is the level 1 can be something like 20 or 30 times in a decade, and level 2 can be more like 60 to 90 or more, and a level 3 for a decade can be a few to several hundred times, and a level 4 can be well over 1,000 times in a decade. Okay, all right. So that's how we can do it quantitatively, if it gives you a better feeling of what do you want to trade, how fast, how often do you, and those things you're not going to trade, they may be important information why your account's going up and down, and it just prepares you for that so that you can stick with your plan. You already anticipated your account going down for a few days. That gives you confidence that the model will likely be right, that your account will go back up over the next few weeks, stuff like that. Any rate, already met one downside target, additional downside targets. Now we even get a gold star into this downside target. And this can be all the way into the 5640, 5696. And it can even go as low as 5600 to down into the upper 5400s. It can go on down towards 5100 and the August low. All on the table. Okay, do keep that in mind. This could turn out to be even a crashing moment. But for the moment, so far, you could argue this is kind of normal level 1, maybe even level 2 type trading, even with all this news and craziness. All right, now, weekly indicator, widening spread, acting even more bearish, suggesting chance for lingering downside momentum the next 1 to 3 weeks. Well, the model is saying it ought to go down at least 1.5 weeks to maybe 4 weeks even. It ought to go down into late March to early April. Then it should bounce in April, maybe even into May, but right back down May, June, July, and it may go lower still. It may only pull back some. We don't know yet. We'll get there. We have the idea when the bad news is coming. When is it going to swing lower? What we don't have an indication is, do we have it labeled level 1 versus level 2? Okay, we have a 2 here and a level 1 out in May, June. It might be the exact opposite. And that would give us clues of how much downside, how important. We do have some downside targets near term, but we really don't have downside targets farther out. We can only deal with percentages and possibilities. That will clear up over time and will help us give us additional information later. Right at the moment, just focus on what's going on now. And it looks like to me, people are just going to sell rallies. They're just going to keep knocking this down. The 5-week average, okay, bumped its head there this week, bumped it there last week, dove below it, okay, came down to my fair valuation, all right, and then what did it do? It bounced off from it, like it recognized that's fair valuation, that's good enough, that's cheap enough. Then they changed their mind, put it well below it. Now you could argue it's getting into undervaluation, but the technicals are saying it can go lower still. The model's saying it should go lower still. Apparently it's going to get deeper undervaluation, and my estimated fundamental valuation can actually be trending lower now. Why? Because the economy is falling apart. It's slipping, okay? We're not really in crash mode or anything. We're not yet in a recession, but we're heading in that direction. People are getting nervous. It's just every day there's something else that's breaking down, okay, and problematic. And Trump people are trying to blame it on Biden. No, it's on them. The reason is before the election, people thought if Trump gets elected, it's going to be far wild and crazy and dangerous. Even if it is going to turn out to be the correct thing to do and a great thing later, it can be all kinds of problems. Businesses started pulling back. Investors started pulling out. After the elections, some of those got back on board saying, oh, we like Trump, we'll handle it. Now some of those have already flipped again saying, no, we don't trust it. Meanwhile, there are many others saying we don't trust it still, we're not going to do anything. And then we had some new ones that really didn't do anything for the election, and they decided, we got to do something. And so it was really on Trump even that far back that businesses were cutting back, not found. They did the same thing in the last Trump term, that they said they were all for Trump, most of Wall Street, most of the business community, and they're all conservative and blah, blah, blah. And then they turned around and actually didn't hire and held back, and they worried and fretted, and they sold some stocks at time. They didn't in 2017. That was a very, very good bull market for Trump. He wound up with ranking one of the top Republicans for that kind of bull market. But then it all went to heck from 2018, 2019. 19 fell apart on COVID and recession in 2020, which he didn't handle that very well. And the Republicans are well known, it's, most of us assume if there's going to be any kind of disaster coming, they're going to be slow to respond to it because they don't believe in using the government. They don't believe in doing anything. They just let everything happen. Whatever happens, you slip and fall on the ice. So what? Oh, your skirt blew up in the wind. So what? Okay. That's kind of their attitude. It's too much of that invisible hand economic kind of attitude, right? And that stuff really, I'm a big fan of Adam Smith there, but at the same time, and Adam Smith, though, has said some things that the Republicans don't want to hear, they don't want to talk about, because Adam Smith was even saying, you got to have a government, and you got to spend some money, and you got to take care of your poor, and you got to take care of your middle class, or your factories just aren't going to run. That's all there is to it. It's as simple as what Henry Ford realized, okay? But the Republicans today, they don't know this, okay? And even if they do, they're being stupid instead of ignorant. They're just literally saying, I know it and I don't care. I want this. I want it to run this way. And we're going to do it this way. And they don't even listen to their own voters, okay? So they're in power. They're going to get it done. And the market is saying, well, even if I'm in favor of this, and even if I can see some clouds going away and we're going to have a better time someday, I got to take care of myself in the meantime. And it looks like I might as well sell. And that's what some of the Republican investors are doing. Conservative investors are selling, all right? Any rate, I think there's a lot more downside here. I think you get a nice, quick, sudden bounce. People are just going to sell it. They're going to say, oh, that's what you do in bear markets. Now, I'm saying we are in a bear market, even though it has not met anywhere near Wall Street's definition. The reason I'm saying that is this minor long-term bottom ideally is due May, June, July, or September, October. If they crash and burn it now in the next 3 weeks, we may learn we can get that bottom sooner, okay? So I'm calling it a bear market until we get a record high, and then I'll probably give up on the bear market. Although until I can find evidence of that bottom from now to October, maybe I won't, okay? There can be just, even we have a fun time later this year, we can still have a crashing moat even later this year. We got to get through this year, and then I think things settle out, calm down, and we can have a bull run next year, but I'm not convinced we're going to have a bull run this year. Not anymore anyways. Okay. All right. So I think I've covered that. And the weekly Dow Jones, pretty much similar. It's just down in late March, April. It's met some of the targets. We have better targets. I think it's going to 41,806 to 41,069 and perhaps even much lower than that. I will say it looks like the percent stocks under the 200 above the 200-day average for the S&P 500 finally caught on, showing some weakness. They're selling across the board here. They're getting panicky. This is the NASDAQ cash. Got those targets down in there, but it can be much, much lower. Not a very good chart in terms of analysis. Mid caps, small caps, all look ugly to me. This is the S&P 500 futures weekly, looking ugly. Down, down, down. Okay, 5-week average capping it. All right, now eventually that chart's going to get distorted later this March when we roll to the June futures. This is the NASDAQ March futures. And just down, down, down. It has met my minus 7% minimum downside target, but I really want the S&P 500 to give me that minus 7. And we're getting close, but I'm starting to think these indexes need to be minus 10% or lower. Wash things out here. All right, next up is where's the equal weighted index? Okay, I think that's fairly important. Doesn't look healthy to me. It's going lower into late March, early April. All right, how about the interest rates? Okay, trying to rebound here. The interest rate market may say, we could get some higher inflation eventually here, but at the same time, other sectors of the economy may see lower inflation and the overall economy can slip into a recession, but it's an inflationary recession. So they're giving knee-jerk reactions here. My problem is I don't really trust my modeling right now on interest rates. I'm concerned that it's going to bounce in level 2 and it's just down, down, down into summer or later. I'm concerned this might even be a level 1. This is a level 2, and then it's down, down, down into May, June, July, but not later. And why am I allowing that? Because we're probably slipping into a recession, and it's not going to bode well, and the interest rates should back off. But the interest rates at times may become nervous that even though the economy's not doing so good, if that inflation ticks up, and I don't think it is. I think the inflation's coming down. I think you want to think recession, lower interest rates, lower inflation, and lower stock market to much lower stock market. I think that's the best way to protect ourselves at least, and may even make a buck on the downside and just hold off, in my opinion, of trying to buy anything where I'm going to set on it for quite a while. This is the Mag 7. Doesn't look good. People are giving up on it. It may bottom as soon as next week, but my guess is it's bottoming latter half March to early April, right along with the rest of the marketplace. And then I want to go to NVIDIA, okay? And I just think this AI boom is on the back burner. I think the 1990s analog, when we ought to be around 1996 or 95 to 97, and we ought to have 2 or 3 more years of beautiful upside before trouble, I think that analog isn't going to work for a while. I don't think the AI boom's going to work for a while. I think we've already run prices up faster than we did in 1990. It's just trying time to knock them down some, stall it out some. It may become a bullish story later this decade, but I think it's going to have headwinds under Trump, frankly. But I could be wrong. Things could say, I know Trump people are just trying to get as much done as possible this year so they stand a better chance of seeing some positive stuff next year for the midterm elections, and then finish out their term, and they think it'll be better. And that may be the case. If they can truly stop wrecking things this year, they may have a chance. If they continue wreck, we got problems, okay? We're going to have problems. All right. Now, I also think the 1920s analog, which we ought to be about 1926 now and rally for another 3 years, 2 years, something like that before we have a big crash and burn moment, I'm a little concerned that analog is off. I'm a little concerned that we can get a crashing moment this year, get a very nice recovery, only crash again towards the end of the decade, that kind of pattern. I think some of those really bullish analogs are going away. I don't trust. I know there's some bulls out there. Some other people yesterday were saying, well, you know, those long-term diehard bulls, they're back at it again. They're saying back the truck up, buy. Well, they've been wrong for a few months now, and I think they're going to be wrong for at least a few weeks, if not a few months longer. All right, something else. Let's flip over to the monthly chart now. Trying to watch my time, not go too far here. There's the monthly chart for futures. Looks ugly. I wanted that. I got it. Now I wished I could play more on the downside. I'm out, and I don't dare get in at these levels. I'll just have to miss out, I guess. But at least I'm out of the market in the sense of I'm normally bullish and long, okay? And I'm just soaking up interest rates. All right, so this is the cash, and it's below the 5-month average. But the history since 2022 has been that it snaps right back above the moving average. So I fully understand people questioning whether they really want to bet on the downside here. It's probably a bit confusing. Is this just one of those brief dips? But I got a feeling this market's going below that 5-month average and may stay below it for a few months yet before we get going. I want to say if we go to a record high, take out the current record high of 6147.43, I really should be long-term bullish into next year, if not 2027, if not to 2030. But if it does it before, I find this minor long-term bottom, the LT3 bottom, due now to October, ideally May to October, then I got a problem that I got to go back and be bearish anyways till I clean that up, get that out of the way. Then I can be more optimistic. But in the meantime, I kind of feel like if I have to miss out of a nice up move to a record high, I'm willing to do it. I'll start over at the record high somewheres. I want to see how much downside we have because this could be blood curdling. This could be a significant drop here that Washington, D.C. right at the moment doesn't know what the heck it's doing, all right, and how dangerous it's dealing with things. All right, what else do I have? The VIX. VIX, some people were saying they're surprised the VIX isn't up more than this. Some people are kind of surprised the stock market isn't down more than this. There's definitely people that are thinking most of this should be just a government problem, not a business problem. But they're getting nervous because they can see it's trickling through. They know austerity really doesn't work. There's certainly people, diehard people, who say it does. They're just scared it's going to bring down the whole country before we go on to better times. And then some, of course, have never believed we're going on to better times. So they're even more nervous of what's going to happen here. This VIX can definitely spike this year. I don't know if it can spike up there with the Japan carry trade, but the Japan is backing off again. They could have another carry trade problem. The U.S. can have something like a 1987 problem, okay, crashing moment. All I can say is the trend of the VIX is up, and I must admit, I don't think people are bearish enough yet. I think they got to get caught up. They're trying to just sell some, manage some, but I think they need to sell quite a bit more, wash some things out before we can get on to any kind of a long-term bull market. We got to get that price much lower where people will say, you know something, I think I won't sell anymore. I'll even buy back in, with the idea that if Trump continues to wreck things, it probably is going to blow over. It's going to work out that the price is beat up low enough to dial in this massive change and shift for the U.S., okay? Hopefully that makes some sense and works for you. So next I'm going to move back to where are we in terms of, I think instead of the intraday, I'm going to go back. I can show you the dollar, however, a little update on the dollar. Boom, big setback. Bitcoin not doing too good here either. Gold's just kind of stalling out, wondering what to do next. Crude oil's not doing good. Crude oil is worried about a recession, and they want to make sure they don't cut the amount of oil they're selling, so they'll lower the price to try to help out. Let's go to the daily chart. And I'm going to flip over to some news stuff. So for those of you, I realize some of you probably already left. You just wanted that general idea where we're going the next few days here. Whoops, that's the wrong chart. That's actually the SSO fund that I like using. No, I want the, we'll get it right here yet. Okay. All right. I think this is a beautiful chart for this trend line. And I think the futures are off even more by the looks of it. Not looking good, folks, but I am going to go for a level 3 bottom today into next Tuesday, okay? And I think it should be this week, so today or tomorrow. I'm going to go that they're going to pick their head up. I am nervous they want to sell into next week. They don't dare buy stocks going into the weekend. Therefore, even if it's a small group of sellers who want to sell before the weekend, they can power this market down. So I may miss out here personally on my quick, fast trading here because I don't want to sell this gap lower today. It just may collapse. We may see a crashing market by tomorrow, or I should say down some more by tomorrow, and then Monday, we get a black or blue Monday, okay? It's just down gigantic amount. It's that kind of market. It can do it, all right? But I'm hopeful, unless Trump says some negative things here in the next few hours or days, I'm hopeful it's going to bounce off of this line and pull up some, pull this indicator up a little bit, give us a little breathing room. And then I want to sell a level 4 rally into next week, but if it doesn't bounce much at all, I may only sell a small amount. I may have to risk management-wise say, hey, I made my money. If it crashes, I'm going to miss out that I didn't keep a good big position. I could see where I could miss out making boatloads of money here out of a crash. It's just unfortunately the way I set myself up here. But I'm very pleased the money I did make in this decline, and it's going to give me a safety net if the whole country falls apart this year. At any rate, I would like to see this bounce, maybe even into next week. I don't think it'll bounce any later than Tuesday. And then I think it's going down more and more and more, okay? That's all I can tell you. I'll try to update as best you can. Chart support might be in this area right here. Put the brakes on it. Bounce up some, but I got a feeling somehow it's breaking lower. And then if you look at the futures, we have a gap that I think that was September 16th. I think that's when they rolled the futures. So that's just a mechanical money thing, not an actual supply demand of the stock market. That gap, however, is about 56.48. So they may want to put it down there, fill that gap just for something to do, meaning it really doesn't mean anything economic supply and demand wise, but it might be something for them to target yet. And then if they can get that done before we roll, then we'll roll over to the June, and it's going to spike the futures chart even if the stock market doesn't go up. We're going to have another gap that someday may have to get filled, and we'll deal with that over time. At any rate, let me go look and see what I have for other news. Okay, I may have shown this earlier in the week here, but it has to do, this is Stephanie Kelton is an MMT person, has written books, done a documentary film kind of thing, and anyway, was making a comment here of what Bessent, Treasury Secretary, was making comments, but where we're going, that the way these Trump people may do is they're going to starve the middle class. and poor and hurt the economy when they think they're actually going to help the economy. All right, this is a chart of initial jobless claims. So we've seen a spike tick up. It's going up higher to much higher because of all the layoffs in government. That's bothering some. This is inflation that I think is putting in a kitchen business cycle that occurs every 3 to 4 years, a top. So inflation ought to come down, and it looks like it's going to with the recession. The problem is it may bottom in just the next couple of months for that kitchen and be up the rest of the year. And we may be in a recession with rising inflation. This could be topsy-turvy, flip back and forth. But also inflation may actually be lower or just sideways to the rest of the year as we work on a standard recession kind of scenario here for the U.S. So just keep in mind the inflation story is still there with tariffs, but I'm wondering, is it delaying down the road in terms of very high inflation? In the meantime, I'm wondering, are we already destroying the economy that can hold back inflation? But the economy is the bigger story than the inflation right now, is how the model is putting on the emphasis or focus. This is the Federal Reserve with the amount of savings, and bam, people are putting more into savings. That means they're spending less at the store, they're investing less in the stock market, they're scared of the future, they want their cash. And next, and I think I messed up here, I had a chart that the defaults on credit cards, and prior, a few weeks ago, I had a chart on the defaults on auto loans, is rising, okay? And it's so high that it spells trouble maybe for the rest of this decade. It spells trouble right now, okay? This is for pending home sales have fallen to an all-time low. U.S. housing market, not a good sign, not a good thing for the economy. In Florida, they're talking about doing away with property taxes. That state is so mismanaged. I used to live there myself, had investments there. I pulled out before I could see the Republicans take it over, and I said, this is not going to work. And my opinion, if they pull their property taxes off, really the rest of us, like here in New York State, we should not pay our federal taxes state-wise, except for defense, because we're just providing welfare for Florida. In other words, they'll cut their property taxes and then they'll figure out a way to get more federal dollars, even though they're anti-federal. That's Republicans for you. They tell you one thing and they do the opposite. They take care of themselves first. I'm definitely anti-Florida. All right. At any rate, David Graeber, I'm actually going to have a meeting with someone this afternoon here, a group of people on social issues and economic issues. A little bit of comment there. And then we're seeing some things. This is from Stephanie Kelton on the inflation talk this week. All right. That you won't have inflation. Lutnick is saying if we balance the federal budget, we're not going to have inflation. And I've thought to myself, that's nonsense, but I haven't had the time to go back and review it. Stephanie Kelton put this out of some of those moments, and we still had inflation. And look at that, 1, 2, 3, 4, 5 years, just marching higher, higher, higher. Fascinating, okay? So we got to be careful what some of these people are saying, all right? This is Stephanie Kelton again, talking about DOGE and Democrats versus U.S. or Republicans. And yeah, the Democrats are actually helping the Republicans in some manners. I spoke to a group of young people here recently and told them, you got to get rid of the older Democrats. They've been playing along with the Republicans for 30 years. Time to stop that. Comment here on what Barron's put out and some of their publications of some of the nonsense that's going on. And I forget, I pulled this out of the book, How Capitalism Ends. It was probably maybe for my own, to go back and review without forgetting, worrying about that I remember the page. Very good book so far. Little something coming up here that people are going to be discussing in coming years as we can continue to turn our country upside down. And more of that book and how capitalism is probably trying to destroy itself. By the way, the writer of that book says capitalism is the very best tool, economic tool, platform you could use to take care of scarcity. He said it's worked fantastic. He says today we don't have scarcity. We have inequality. We have lack of justice, economic justice. He said, those are the things to be fixed. And he says capitalism won't fix it. It makes it worse. Time to move on. And by the way, that book is written by Stephen Paxton, I believe. Here we go. Here's the U.S. credit card defaults. This is an LT3 decade-like business cycle. To have this above that is a rule violation. It triggers another rule, just like I use in the prices in the stock market and commodities. It's saying that could be higher by the end of this decade and in coming years. But I can see it backing off abruptly too, and then higher, okay? What I'm more concerned is the height of this thing relative to the whole history. It is a warning. It won't cause a recession by itself, I don't believe. I think we're a little bit different structured right now, but it's a negative factor. It's a warning something can just fall apart on us. More Stephanie Kelton, recessions, and people were asking, well, how did Clinton pull it off? Because he did such a good job. Well, he was smart enough to do Republican and Democrat stuff. In Florida, we're seeing cancellations of contracts for buying homes, condos, and whatnot. And I believe, maybe I read it wrong, but I believe it's so high that if you compare it to nationally, it's the highest ever for the U.S. and in Florida. They got problems. And China dominating global manufacturing, and the way we're going, I know the Trump people think they're going to try to fix this. I think it's, I'm forecasting the next 100 years. For the rest of this century, I think Asia wins. I think China wins, okay? So we got to get to at least close number 2, and then we won't know the difference and we'll be happy. If we're a distant number 2, we're going to be a miserable bunch for the rest of this century. This is some of the states that are receiving money, okay? And it seems like the red states receive money and the blue states give money to the red states. It's subsidy welfare, and it's our federal tax system. Red states, no matter where I've traveled in the past 10 years, I don't see where all this Republican conservative stuff has made people money and built good states. It's just not there. And I have young people that some of them are wrapping up tours here around the U.S. one last time before they leave the country for good, or at least for 10 years, and then they'll reevaluate. I'm proud of them. I'm glad to have helped with just some opinions, basically. But it's interesting how all of them have toured and they're coming up with the same story. The red states are not nice places to live, and they're really were disappointed in Texas. In rural Texas, they said it was like a third world country. And I know people down there living there. I have relatives there that want the hell out, okay? Another thing, Texas is I think Texas is the biggest importer of Canadian goods. Oh, this is going to be fun, folks. It's going to be fun or not. Hello, lots of luck. Little social commentary going on in the internet and tying it in with religion. May or may not be true, but as far as I'm concerned, I'm keeping an eye on it. Okay, to wrap it up for this week, I'm keeping an eye on basically what we have here is the futures are still off about 62 points in the S&P 500. I'm going to go with the idea it is going to bounce by tomorrow for a level 4. Sometimes they like to sell on Thursdays and buy Fridays as kind of wrapping up the week. Sometimes they do the exact opposite of that, okay? But this time around, I think they're really questioning themselves, what do they want to do ahead of the weekend? Because Trump might screw something up here, and we've got a bad Monday, or maybe a very good Monday, okay? I think this is going to bounce some. Okay, I'm thinking it's going to bounce in the next week, and then it's going down, 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 okay? I still want to be bearish into late March, early April, and we're just going to have to deal with all these twists and turns either way. I hope you have a great day, great week, and let's keep our head up, chin up, and hope for the best. But I think this should recover today. I think this is kind of a test to see, will people panic sell near these 200-day averages that some people are watching, see if it'll bounce some. But I think if we can get that bounce, we need to be really concerned if it goes back down below those moving averages or those long-term trend lines they're watching. It won't be a good sign, all right? So past results and indicative future results, and thank you. And if I can have any alerts for you, I will give it, or even just some warnings, updates. Thank you.